Yeah, I continue to be bullish long term, and then even in this cycle, I don't think the cycle is over yet. I've liked the fact that we get these kind of mini cycles of slightly euphoric and then 7 months of sideways chop and another like spike up. And I expect that to continue at least for we'll see what happens the rest of this year. But I still think we'll see higher prices before we hit some sort of longer correction. Last cycle was over 75% correction. I don't know if we'll get that again. It depends on how extreme some of this gets. But I don't think it's fundamentally concerning any more than prior cycles. So far, I would say less than other cycles.
Yeah.
But I do think we're going to keep going through, mild euphoria, washout, mild euphoria, washout. You can either wash out in terms of price or time. You can just go choppy sideways for half a year, full year, get all the interest out, get the, compress all the MNAVs. And
Lyn Alden opens her analysis by noting a critical difference in this current Bitcoin cycle, the reduction in extremes, both in euphoric price spikes and devastating drawdowns. Historically, Bitcoin has followed a pattern of violent upward volatility, the kind that attracts excessive leverage and hype. That's when traders pile in, emotions take over, and the market reaches euphoric levels. These peaks were often followed by multi-year bear markets and 75+% drawdowns. But this time, things look different.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This cycle so far has been characterized by less extremes. As I mentioned before, anytime Bitcoin needs upward volatility to grow. Anytime you get upward volatility, you're going to get people saying, well, if I leverage it, I get even more gains. And then emotions kick in and people can get euphoric. And now in the past, in Bitcoin and broader crypto, this would happen to extreme levels. And you get like a multi-year drawdown and washout. So far this cycle, and we could later have a blow off top, but so far this cycle, we've been having kind of more moderate levels of euphoria. So for example, when the ETFs were approved, and in the month or two that followed, we had kind of mild euphoria in the market, and then we ended up getting a 7-month consolidation in Bitcoin because of it. And then when the election happened, we were perceived as having a much more pro-Bitcoin, pro-crypto administration policies in play. We got a really big bump in November, and that gave us kind of, again, another like 7-month-ish correction. I think that's pretty healthy when you kind of have this step up and then big choppy sideways of kind of letting off steam and another big spike up and another big choppy. I generally expect something like that to keep happening. The latest one is you have some froth around like altcoin treasury companies, which I don't think is a particularly healthy development. And even Bitcoin treasury companies, if there's too many of them too quickly and some of them are not managed well, they are potential. They're potential sources of liquidation as soon as you have any sort of severe stress or prolonged mild stress in the market, where the market kind of closes on them and they don't really have the cash flows to support their debt obligations, so they end up having to liquidate. I do think we'll get some liquidations. Last cycle was over 75% correction. I don't know if we'll get that again. It depends on how extreme some of this gets. But I don't think it's fundamentally concerning any more than prior cycles. So far, I would say less than other cycles.
Yeah. I agree.
But I do think we're going to keep going through, mild euphoria, washout, mild euphoria, washout. You can either wash out in terms of price or time. You can just go choppy sideways for half a year, full year, get all the interest out, get the, compress all the MNAVs and
time-based capitulation. My favorite thing to watch when people lose their mind at the same price as it was 6 months ago.
Yeah, I continue to be bullish long-term. And then even in this cycle, I don't think the cycle is over yet. I've liked the fact that we get these kind of mini cycles of, slightly euphoric and then 7 months of sideways chop and another like spike up. And I expect that to continue at least for, we'll see what happens the rest of this year. But I still think we'll see higher prices before we hit some sort of longer correction. So I think that as mining rewards are now a small percentage of supply, that the 4-year cycle is much less relevant than it was for maybe the first 3 cycles. I think global liquidity is a really big metric to monitor for the overall cycle, as well as levels of euphoria. So I'm thinking less in terms of time and more like that there's a certain set of flags I look for. And the things that give me pause for, like, say, a 6-month or 12-month period is signs of euphoria. And my favorite metric for Bitcoin is on-chain, like its market capitalization compared to on-chain average cost basis. Basically, the value of all coins last time they moved, which is often to and from exchanges. And that metric might become less relevant over time as more volume happens in other environments. So far, it's not really the case. So right now, that's not a very euphoric marker. If that becomes rather euphoric, I would become concerned because that's more indicative of a big pause. Then I do look at things like, what are the premiums on Bitcoin treasury companies? How many altcoin companies are coming to market? Just signs of froth. Because the more signs of froth you get, the more it is like, yeah, we're probably going to have like 6 months of correcting in time or price to wash some of this out and kind of reset. There are signs that you get 3-month or 6-month corrections at times. Nothing's really kind of warning me about a multi-year correction at the current time, which is why I think this cycle still has legs. And where I would become more concerned maybe on a multi-year basis would be more extreme signs of euphoria, leverage, dislocation from cost basis, and that sort of thing. Because the problem is that a lot of these, they offer a service basically. The services compete on price. Like stablecoins want to go to whatever is cheap and scalable, for example. There's not a lot of huge differentiation there. The winners from one cycle are rarely the same winners of the next cycle. They all tend to have a long-term rollover relative to Bitcoin after 1 or 2 cycles of kind of their initial action. So I think there's some inevitability that people are going to look at the top 10 assets and say, well, why shouldn't I try to lever this up, or why shouldn't I try to make this available to capital markets? And there's a pop there, there's a speculation there, or they can say, look, we're going to get the staking yield on top of the asset, and you don't have to worry about that, and we'll just do it, and we'll attach a little bit of leverage to it. And I can see why there's a market for that. The problem is that the way that these bull markets tend to end is that capital just gets fractured everywhere. So it goes into Bitcoin, then you think, well, Bitcoin rose. Let me buy altcoin number 82, and so it gets split 100 different ways. And then last cycle was like NFTs, and you have as long as NFTs are a thing, people are going to keep issuing. You have meme coins, and now it's kind of like, okay, let's have more and more treasury companies come to market in all these other assets, and eventually just that you exhaust demand, you fracture the narrative, and then we talked about washouts before, either in terms of price or time, where you have 6 months or 12 months, or depending on how euphoric and then severe it is, you just have a period of time where anything that's not actually of long-term value starts to drain back into Bitcoin, and even Bitcoin can temporarily drain from euphoria back in basically into the dollar until that long tail of weaker assets is largely washed out. And then that can set the stage for the next up cycle. And hopefully it doesn't have to be one of those multi-year bear things. Because hopefully you get less euphoric in the first place and then less crazy in the downside. It could still happen. But basically, I think either way, you still go through some degree of cyclicality that washes out anything that's not worth being here for 10 years.
A powerful insight Alden brings up is the fracturing of capital during bull markets. Every cycle, capital flows first into Bitcoin. Then investors branch out into altcoins, NFTs, meme tokens, and speculative schemes. Eventually, that capital gets spread too thin, and the speculative wave burns itself out. When that happens, capital starts to flow back to quality, Bitcoin being the primary beneficiary, while the rest of the market deflates.
On average, I view it more as a next cycle thing, most likely, at least for numbers that really matter. So, for example, when we saw when MicroStrategy started the Bitcoin treasury strategy, they immediately started marketing the idea to other corporations. They would hold a conference Bitcoin for treasuries, and really no one followed them anytime soon.
I think that was because of GAAP accounting rules, or at least that's how I cope.
Well, there were accounting issues, and also just not many people were in the position of Michael Saylor, where he had such a strong ownership level of the company. He was able to think in terms of years and decades rather than quarters and maybe a couple years. So instead of being like a career executive, like someone who could get easily fired or just trying to optimize their near-term pay package, he was an owner and able to kind of make these long-range moves. That's pretty rare. But we started to see this cycle finally after a cycle delay, better accounting rules, and like a lot of Bitcoiners saying, well, if existing companies are not going to do it, we'll basically start new companies and do it. So it took more time than many people thought, but it kind of followed. And I think the same thing happens with sovereigns. I mean, obviously El Salvador was an early mover. The Kingdom of Bhutan was an early mover. You see like, UAE at the sovereign level makes some mining investments and ETF investments and things like that. There's, a handful of entities out there. Generally speaking, the smaller ones can kind of execute faster on average. I think we'll continue to see talking about it more so than someone kind of just like jumping in and wanting to buy half a million coins from some big country and kind of doing the full MicroStrategy playbook. But I do think that over time, this will continue to leak into sovereigns. They'll own it indirectly. Like you'll see a sovereign wealth fund own MicroStrategy, for example, or own an ETF, or potentially buy some Bitcoin around the margins. And it just kind of keeps trickling in from there as it becomes a bigger, more liquid, more understood network. I think that one of the bigger things this cycle is increasingly understood at the sovereign level that at least it's here to stay. With like the SEC kind of losing their court case and having to let the spot ETFs come to market. And then this kind of pro-Bitcoin, pro-crypto administration, which is that even I think the market's going to reach the point of scale and acceptance where even if say there's, elections down the line, we have a less favorable administration, it's hard to roll back all of it. Even if you take, 3 steps forward, 1 step back, it's still 2 steps forward. And especially when you're looking at a global scale, where one country could pull back, another country can say, well, then come to us. We'll bring your businesses and your capital and here. So I think this cycle is kind of marked more by it's here to stay at the institutional scale and allowed by most at least semi-free countries. And over time, as more cycles play out and as the asset hopefully stays big and liquid, you'll get more sovereigns that actually maybe want to buy it and hold it at scale. To have the early ones trade at a premium makes sense because they're offering Bitcoin to pools of capital that couldn't really buy Bitcoin before. Yeah, of course. So if you're bullish on Bitcoin and your mandate is to only own stocks or only own bonds, and you can't own a commodity, or in some cases you can't even own an ETF, if some company issues equity or bonds that give you Bitcoin price exposure that fits in the mandate of your fund, you've now opened this really big pool of capital, and there's plenty of capital to say, well, I mean, if I had to pay 1.2x for it, it's still Bitcoin. So sure, give me that. And then the next layer is, corporations have better leverage than most of us have access to. So, we can take out loans, but they could be callable, for example. Whereas like MicroStrategy was taking out like 5-year convertible debt, for example, which is a much better way to get through a full cycle. Now they shifted more into preferreds, which generally require even more scale and liquidity to be able to access something like that. And so part of what they can do is they build a moat and they basically say, this is the better type of leveraged Bitcoin than most other types of leveraged Bitcoin. And therefore, people are willing to pay somewhat of a premium for it. And so if you're the leader in your jurisdiction, so in the United States, Metaplanet, for example, so I think those make sense. I think when you get into like Bitcoin Treasury Company number 17 and people can't name the CEO, what are you doing differently in some cases, or what market are you going after? That's where I think people start to say, well, why should this one have an MNAV that's above 1.1 or whatever the number might be? But I do think that it's not irrational for the ones that are considered to be well executed and leaders in their space to trade at a premium.
Lyn Alden's analysis paints a picture of a more mature Bitcoin market, one still subject to cycles, but perhaps less violently euphoric and less catastrophically bearish than in the past. The institutional and sovereign adoption wave is slow but steady, and while froth exists, particularly in altcoin and treasury markets, the core fundamentals of Bitcoin remain solid. In Alden's words, this cycle still has legs, but success will depend on keeping emotions in check and understanding where we are in the broader macro liquidity cycle.